right, everybody, welcome back. Today I'm going to talk to you guys about the cons of investing in the stock market. I've already talked to you about just general information and the pros. It's time to look at the cons and why you should not invest. First thing I'm going to talk to you guys about is the risk. The risk you're taking. You could lose your entire investment. If a company does poorly, investors are going to end up selling off, and that will send the stock price plummeting. When you sell, you'll lose your initial investment. That's why a lot of people say, if you don't sell, you're not losing money. If you can't afford to lose your initial investment, then you should buy bonds because they will not decrease in value. You do get an income tax break if you lose money on your stock loss. And then there's also the scenario that you will have to pay taxes if you make money. So wins and losses, I guess. The stockholders are paid last. Preferred stockholders, bondholders, creditors, they're the ones that are going to get paid first if a company goes broke. But the thing is, you have to look at this. What are the odds the company goes broke? Because that's the only way that the company will break it down like that. A well-diversified portfolio should keep you safe if any one company does happen to go under. Another thing you need to look at is the time. If buying stocks on your own, you must research each company to determine how profitable you think it will be. Before you buy a stock, you must learn how to read financial statements and annual reports and follow your company's development in the news. You also have to monitor the stock market itself, as even the best company's price will fall in a market correction or market crash or a bear market, which we previously discussed. The stock market can be an emotional roller coaster, and some people are actually not ready for that. Stock prices rise and fall by the second. Individuals tend to buy high when they see the prices going all the way up, and then out of greed, they end up selling low out of fear because it happened to crash the second they bought it, which I'll be honest, it happens. It happens. The best thing to do is not constantly look at the price fluctuation of stocks. Just be sure to check it on a regular basis. For the most part, like I said in the last presentation, the stock market does fluctuate. So it is something that you need to be aware of and take into consideration. The biggest thing here is that you are a single investor, most likely doing this at home, and you need to think about how there are professional investors out here. Institutional investors and professional traders have much more time and knowledge to invest. They also have sophisticated trading tools, financial models, and computer systems at their disposal. All right, and with that, they are finding out how to gain an advantage as they work in like teams, groups, and their information is much more detailed than yours is going to be. Yeah, you can go on Yahoo Finance and get all the information from there, but theirs is going to be much more scientific data and everything like that. And the big thing here is that, when you do make an investment, it's a time investment as well, because you're not going to get 100% return on the first day. Even the best investors in the world make on average between 10 and 15%. And that's something you need to think about, is how long are you willing to do that? And if you want to talk about day trading, the minimum amount you need is $25,000 to get started with day trading. So that's why some young investors think, oh, I'll just do that and, make money quickly, like the Wolf of Wall Street. But with that is a whole different thing, because the people who are doing that for a living are jumping into a stock, sitting there for 5 seconds, and jumping out with a small profit. And with that, they're only hoping to make, 10 to 15%. This is something you really need to take into consideration. So if you're not ready to lose money, then you're not ready to make money. Thank you guys. I appreciate it. Have a good one.